Go ahead and start the recording. First off, let me just ask, can everybody hear me okay? Cool. Muy excelente. Darren, I just got an email from you where you asked about futures. Actually, I didn't know you were talking about currency futures. I thought you were talking about other futures, but this is kind of off topic. But absolutely, you can actually use PitView with currency futures because obviously, you know, futures are all about the underlying. So you can absolutely use PitView to analyze, you know, currency futures. As long as you get, you know, you get the gist of the bid and ask price, essentially. So I just was reading that, so I wanted to let you know. So it's really not, I mean, if you don't, I like, you know, being able to open up futures accounts, but if you don't have that ability, or Forex accounts, I should say, but if you're not able to do that, I wouldn't worry too much about it. And futures, absolutely, this can be used on it. And there, you should be able to see my screen now, or see me and my ugly mug. It's good to be back presenting the PitView Education Series. This morning we already did a session on the basics of PitView, really just going through the ins and outs of, you know, where do the numbers come from? You know, the buy and sell imbalances, you know, trading along with the market makers. Based on the feedback I've gotten so far, you know, kind of that three-step process into how we view and how we calculate where those buy and sell imbalances are, I think really opened up a lot of eyes as far as how simple this tool is to use. What I've learned in trading in the past is people tend to make things much harder than they are. The ongoing part of the series, and I'll be doing these webinars each and every week, you know, going through basic material, going through more intermediate and advanced material, which this webinar today is designed as more for intermediate students, because we're going to get into more of the execution phase of PitView and how we execute upon it. Although Darren, Paul, Ryan, I know we already kind of did that this morning too. We got a little off topic and went into some live trading, but that's okay. So let me first go in, and each class has to always start off with the risk disclaimer. So let me go into the risk disclaimer. This is risky. I used to work for many brokers in the Forex markets, and you used to have to pull up this huge, long risk disclaimer. Now I think it's okay to just say this is risky, high risk, high return investments, past performance not indicative of future results. You use risk capital in your trading and manage your money effectively. By now, if you are more experienced students, when it comes to PitView, you should already probably know that information, so it's not necessary to hang on the risk disclaimer too long. So today's subject is essentially, you know, how do we implement PitView into our trading method? You know, what is a trading method, first and foremost? For those of you who attended my class a couple weeks ago on comparison analysis, you've probably already seen this little PowerPoint slide here where we talk about analysis, execution, and management. I really try to keep things simple in my trading because I was the half in high school that made the top half possible. So I don't consider myself to be the smartest guy in the world. So I usually have to keep things really simple in my head. So when I talk about a trading method, you know, it all comes down to these three simple things to me, you know, because I can't put too much into it. You know, analysis being able to create a view. I think a lot of trading, where a lot of retail traders go wrong, is not being able to formulate their own opinion on what's happening. So analyzing the market, formulating your own opinion, and then executing off that opinion, the execution stage. That's where we pull the trigger. It's another big problem a lot of traders have, is not being able to pull the trigger on trades. I actually pulled the trigger on one this morning for a couple of you. So I, you know, being able to pull the trigger is a very important piece of it, the entry and exit of a trading method, and then also managing your risk, essentially. You know, analysis is essentially comes down to, you know, what is the trend, Execution comes down to, where do I get in, and management comes down to cover your ass in case you're wrong is what it boils down to. So those are what I break a trading method into as far as 3 simple steps. Obviously, today's class is designed as, how can PitView complement your trading method? Trading methods are, in my opinion, and this is an opinion statement, a dime a dozen. If you go on to Google and Google, Forex trading system or the best Forex trading system, you're probably going to get 1,000 results back. It's not necessarily about what your method is for entry and exit, because all of us on this call, even right now, are different types of traders. Some of us are long-term. I just got an email on that one too that I need to return here. Some of us are medium-term, more swing type of traders. Some of us are short-term, maybe 5-minute, 1-minute, scalpers even. So all of us have different types of ways that we trade. Trading is hard enough, and when you Google like the types of traders that are out there, you get quantitative traders, analytical traders, fundamental traders, technical traders, fun to technical. I think no matter what your method is and no matter what your background is as a trader and what you like to trade, I think PitView is one of the few things that is kind of a melting pot of all different types of traders, in that it can help anybody, no matter what your time frames are. How can PitView complement your method? A lot of today will spend on what we call the 3-step method. I know people like, I don't know if Herc's in here or not, but I haven't talked to him in a couple of weeks. In fact, I haven't been around my email there. I know he sent me some, but we're going to try to spend a little bit of time live today, really showing you how do you get to where the rubber meets the road on how you execute on what I think is the most powerful portion of PitView, which is the 3-step method for complementing your method or your system on how you trade. Or there are people out there that just use PitView on its own as just a standalone type of trading method in upon itself. The 3-step method essentially comes down to the ways that we analyze and execute on a currency. The first thing we do is pick a currency. What currencies are strongest and weakest out there. Then we have to pick a pair. After you look at how the euro is trading against all the other currencies, how the pound is trading against all the other currencies, after you get a good feel over which currencies are driving overall strength and which currencies are driving overall weakness in the market, once you know which currencies those are, what the bullies and the wimps in the schoolyard are, then you need to pick a pair. Which pair is performing the best overall. And then that's done through group view. And then picking a trade is essentially done through pair view, or confirming a trade, if you will. As far as the complements to your trading method, if you already have a trading system in place, if you already know the type of trader you are, the things that I've found, for example, I've been trading for 17 years. I think I have a pretty good idea of what I like to trade. I'm not a very complex trader. I like support and resistance trading. I like trading off retracements, and I love using PitView as not only a confirmation tool, but it's also a tool that can get me into trades earlier and keep me in trades longer when they're profitable. And that's one of the things that I really like about it. People that have been my students for a long time, I used to teach for like the exchanges. I taught for the Mercantile Exchange, the CME. I taught for the Chicago Board Options Exchange. And I also have spent the majority of my career literally traveling around the world teaching classes on Forex trading. People that have gone back into my history and have known me for a while know that I don't really endorse a lot of technical indicators or products, if you will, because I'm more of a price trader. PitView is one of the rare exceptions to that as far as tools that I endorse and that I use myself and that I think is extremely powerful. Right here where I say confirmation tool for existing methods, I know most of you on this call are more experienced traders, so let me just have a little sidebar with you and kind of explain what I mean by this. If you like trading, let's say, breakouts during different types of sessions, like I like trading London breakouts when the market tends to consolidate on the European and London currency during the Asian session, it tends to break out in one direction or the other during the opening of the London session. Well, as a confirmation tool, oftentimes I can get whipsawed in and out of those trades where it will break through a high, come down, stop me out. And most of the time it's because I was on the wrong side of the market to begin with. PitView is great for being able to confirm, are you on the right side of the big money in the market, the market makers? That's what everybody wants. Everybody wants to be able to trade along with the market makers and the liquidity providers in the market. It's just there's never been really a tool out there, and especially in the Forex market, that can give you an up-to-date, real-time, even leading type of indication of where those market makers are heading, of what their actual positions are real-time. And that's what I like about PitView, because it reminds me of, and the name even is very ironic in my opinion, because it does remind you of being in the trading pit. You know, one of the things about being in the trading pit on the floor is oftentimes you don't need a trading system or a method if you're trading on the floor to know when to buy or sell. You can feel it, but because you're around a lot of big money movers in the market. And when you see the buying pressure is starting to be there, you start to feel that emotion. You start to feel that shift in sentiment from sellers to buyers when you're in the pit on the floor. And that's one of the things I love about PitView, is the fact that it does put you in that situation where you're getting to it's almost like you're standing next to the liquidity providers and are able to track whether they're buyers or sellers that day. And it's awesome for being able to confirm trade opportunities, stay out of bad trades, and keep you in profitable trades even longer. Now, forgive me, because you know, when it comes to defining your trading method, I know this may sound a little redundant, if you will. I want to talk about a lot of questions that I get, not just from basic students and new people to PitView and to trading in general, but also questions that I get from more experienced traders. You know, I have the benefit of knowing a lot of professionals in the industry, professional traders, hedge fund managers, people that are what we call big hitters in the market. As far as defining your trading method, most of us have defined trading methods, the time frames, entry and exit, and management. You know, management doesn't change. It's just basically covering your ass, covering your butt, if you will, in case something goes wrong. A big question that I get quite often from people that use PitView is the time frame portion of this. This kind of goes back to some basics, but since we're kind of going into the execution phase on how to use PitView to execute in your trading method, I wanted to talk a little bit more about time frames here for just a second, and then we'll start getting into entry and exit and some case studies of how we use PitView to enter into trades and how it can keep us into trades longer. The management portion really is not something that can be taught. That's your simple percentage of capital rules, making sure that you're not risking more than a certain percentage on your account on any one trade. Essentially, that you're not going to blow up your account in one trade, because one thing you all have to remember is that trading is a game of probability, whereas the probability is never 100% on anything, especially in Forex, which I think is probably the best market to trade. That puts you on more of a level playing field with the institutions. You know, nothing is 100%. Even if you're a professional bank trader, you're not going to win 100% of your trades, and nothing's ever 100% accurate. We're just trying to increase probability, and we use these types of tools to get that probability to an acceptable level. So to answer one question on time frames, you know, like I said earlier, a lot of us in this course right now, we all have different and varying types of methods in which we trade. Some of us are long-term traders. Back when I was an options trader, I would consider myself long-term because I was holding positions for 2 or 3 months at a time. Medium-term traders, medium-term is not as easy to explain because there's so many varying types of what we consider to be medium-term traders. You know, swing traders, position traders. Essentially, the way I define, you know, myself, you can almost call it a swing trader, I guess, because you know, you're looking at maybe shorter time frames to enter and exit out of trades, but you know, you may be only using like 1 hour or 4 hour charts to get into trades. They basically last outside of a day, but less than like a month. at times. And then there are short-term traders. One thing you have to know about me, and I just want to throw this out there as a disclaimer, is I don't paint myself with a time frame brush. I think if you want to become a professional trader, if you want to become a really good trader in any market, you shouldn't try to paint yourself with a time frame brush. All three of these time frames I have used pretty consistently in my Forex trading career. I've traded long term. I've traded a lot of swing trades, especially lately with the low volatility in the market. But I also love short-term trading. I love being able to get in and out of trades in the same day. I love news trading. I think PitView is awesome for news announcements. I have an actual presentation I'll be doing on how to use PitView to trade the news, where I might be using a 5-minute, 1-minute chart to get in and out of a news trade, whether it be on an impulse move or on a retracement. So all three of these time frames, I don't paint myself with one time frame. I use them all because market conditions are constantly changing. Now, why am I bringing up time frames to more experienced people in this class? Well, when it comes to time frames with PitView, the thing you always battle whenever you're introducing a new product or a new tool to the marketplace, and PitView's been actually around for quite some time, is the analysis paralysis portion of it. Most people, when they get a new tool that they can use, they tend to get paralyzed. they analyze way too much. So this common question of what time frame should I use, Steve? Well, the same rules apply to PitView as apply to your regular analysis and trading. Now, an example of this would be the following. Look up, not down. Have any of you ever heard that term, look up, not down, and know what it means when it comes to your trading and your time frames? I'm just curious. Sometimes I know terms sometimes don't translate well to other people because I used to work on the trading floor, and I never knew if that was just an inside term that we used or if it was outside, something that everybody used in the markets. But look up, not down essentially applies to time frames. An example of this, if you make your trading decisions, let's say, for example, I've had several trades this week that I've done off of 1-hour charts. When I'm more in swing trading mode in the market, I'll often trade from 1-hour charts. I love looking at 1-hour charts to enter and exit, especially with the low volatility in the market, because a lot of times nowadays, in order to gain a large amount of pip movement outside of a fundamental event in the market, you have to be able to hold a trade more than one day. So looking up, not down means that if I'm looking to place my buy and sell orders off a 1-hour chart and hold a trade and analyze it and manage it on a 1-hour chart, I'm probably not going to look at a 5-minute chart. If I'm using, let's say, a moving average or even a support or resistance level on a 1-hour chart, I'm not going to pull up a 5-minute stochastic. Looking up, not down essentially comes down to the fact that whenever you're trading with a certain time frame, if you like to trade off of 5-minute charts and that's what you use to trigger your trades off of, it's probably not best to narrow it down to a 1 minute. Looking up essentially means that you're bringing more data into your trade. If you start to narrow down your time frames, that means you're bringing less data into your trade. You're zooming in on it too much to where the little ups and downs and shifts in the market of supply and demand can really upset your entire trade if you go down and narrow down to too short of a time frame. So all that really means is if you trade off a 5-minute chart, generally you want to look up at longer time frames, 15-minute, 1 hour, 4 hour. It's hard to do this when you first open PitView because you'll see so many different time frames being digested, if you will, or being shown on the PitView, and that's because most of us don't know how to really look at it as the same type of tool as, let's say, a stochastic or a MACD or an RSI or a CCI. So the first thing that I really want to be able to show you, not only from the 3-step method perspective of how we pick trades and going through some case studies, but also, how to kind of customize your time frames to ensure that you're looking up and not down, and that you're looking at you're not bringing too much information into your trading decision. Hold on a second. I promise you the presentation is not over. Hold on one second. Let me check something on this little PowerPoint. Let's see. Can I go forward from here? Nope. It ends it. Huh. I messed something up here. Bear with me for just one second, folks. I've been an instructor for for a long time, so 7 slides. Yeah, there's 7 on there. Something got a little messed up in translation here. Okay. One thing I've learned from teaching people for so long is that you got to roll with the punches. And I was planning on doing quite a bit of live analysis with you today anyway. There are some other subject matters that I wanted to go through on the PowerPoint before we went live, but I think I can roll with the punches and actually just walk you through them using my notepad. So is it okay if we just go ahead and go live from here? Is everybody okay with that? I don't want to waste all of your time, so I want to, okay. I like going live anyway. Good thing about teaching the markets for so long is that you're kind of able to do that quite a bit in my experience. So let's go live and take a look at this. That was a little embarrassing. Unprepared. That's not the way I like to start off my my return to my PitView instruction share. Whatever happened there, I can guarantee it was probably my fault somehow. All right. So let me go in here, and we'll just start going through some different case studies on the screen of how to utilize PitView and how to pick trades from here. So let me go in and pull up my MetaTrader. And I want to make sure that you can everybody see my screen okay? All right. So let me pull up my MetaTrader and I'll go through a couple of different case studies. Bring this up here. I keep on double clicking on it. There we go. And then let me go in here and make sure that these buttons are all on top. There we go. Excellent. All right. My face might be a little red. So let me start off on my little handy dandy notepad here first and just kind of explain to you the introduction as far as how we start to implement, PitView into our trading method, no matter what our time frames are. What I like to start off with, and if you attended my presentation on comparison analysis, is I use pretty much a simple, 3-step method, and this is what we'll start off with when analyzing PitView. I know some of you have seen this before, but I'm going to try to put a little bit of a different spin on it so that you get a little bit of a better idea of how I look at these things. So a simple 3-step method for analyzing trades on PitView would be: 1, we already went through this, pick a currency; 2, pick a pair; and 3, pick a trade. Those are the 3 things that I think PitView really, when it all boils down to, that PitView does really well. Picking a currency comes down to what we call the global view. Picking a pair comes down to something we call group view. And don't worry, if you don't get this the first time, you'll get it the second or third time that I go over it. And picking a trade, which would come down to pair view. Now let me pull up just a couple of other screens here. When it comes to these 3 things, in this case, I have my global view right over here. Whenever I put this on, I always have to reset these to topmost. I can bring this down. Go over. There we go. All right. So you see my MetaTrader account right over here, and we'll start to look at some charts here in just a second. And there's two trades that I have on right now. One of them is being long dollar yen, and I'm going to explain that one to you. That's going to be one of our case studies. One of them is being short euro Swiss. These are both more swing type of trading strategies that PitView actually helped confirm, or in one instance actually got me into a trade a bit earlier than expected based on the market maker movement. So we'll go through these two case studies, and I'll explain to you how we kind of find these when I first log in the morning. So you'll have to listen to me pretty close here as we go through this, because I want to make sure that you really get this. You know, when we first open up our trading account or our trading, platform for the day, the first thing that you like to do is you like to be able to analyze what's moving the market. I even explained this to the basic students earlier. I explained to them how, when you're looking at the market overall, you do not want to. One of the problems that people have is picking the wrong pair. People wonder why their trades are not working out so well for them, and it's because they're not really trading the currencies that are in play from the market. Now, if you're in my earlier class on PitView, you would already know that what we're looking at here is all just imbalance from the market makers. All we're doing when we're looking at whether it be a group view or a global view or whatever currency that we're looking at is we're looking at the market maker buy and sell imbalances. Essentially, it's like standing next to a market maker or liquidity provider and being able to identify, what his sentiment is. Is he more bullish or is he more bearish? And a lot of these numbers that are being thrown your way, they're actually very simple in the way they're calculated. The fact that it can calculate it is what makes PitView special. So going in here and looking at global view here on the left-hand side of the screen, let me go ahead and get my screen set up the way it usually looks here. This is global view up here, this is group view, and right down in here, this is what we call pair view. And so I'll keep all three of these on, and I'll quickly kind of analyze these and show you, what we look at. Now, the first thing that I wanted to go back to is the fact that you see here I have the Euro Swiss on a 1 hour time frame here. And this is a trade that I was actually looking at earlier with some of my students, and PitView did nothing more than it confirmed the trade and got me in at a very good sell entry before it started initially making its move. It's not a highly volatile pair, but it's still one that I was looking at based on some parameters that I like to trade with, which was confirmed by PitView. Now, since I am trading off a 1 hour chart, when you look over here at my screen, what you see on the global view, and what global view is doing is it's ranking the currencies over time frames based on the buy and sell imbalances from market makers from strongest to weakest. This is probably my favorite type of analysis. It's called comparison analysis, where you're not just looking at one currency pair, you're looking at how a currency is trading against all the pairs. And what these totals are algorithmic totals based on how these currencies are performing against all the other ones that it trades against. So my first thing that I do when I'm going into using the three-step method with PitView is I'm going to look at, you see I have 1 hour here at the bottom, and this is what I mean by looking up and not down. I have a 1 hour, a 2 hour, and a 4 hour on here. And I have these, and the currencies are all being ranked from which ones are the strongest over that time frame versus which ones are the weakest. So when we look at, let's see on the 4 hour chart, you can see we have the loonie, the Canadian dollar right here at the top. We have the Swiss here right near the top, followed by New Zealand and Aussie. These are all ones that we would consider performing well as far as just a demand from market maker sentiment, the buying and selling imbalances. What these numbers are meaning here is on the 4-hour totals, it's showing that market makers are favoring the bid. These would what we would call well-bid currencies over this time frame. The 2-hour chart, we see we have the Swiss right here near the top. The 1-hour chart, which is what I'll generally execute on, is I also see the Swiss right here near the top. So judging off this, what I see is that the Swiss has actually been performing quite well over multiple time frames when it comes to nothing more than market maker sentiment, when it comes to buy and sell imbalances, to where we know that the liquidity providers are essentially favoring the bid or the buy side of the Swiss franc. What I also try to look at, and it all really depends on if I'm already in a trade or looking to execute a trade, is I also want to see which ones are underperforming for that day. Like in this case, when we look at the bottom 4 currencies, we have the euro, dollar, yen, and pound. We have the euro, Aussie, yen, and pound. The euro, New Zealand, and pound over the last 1 hour. I always want to look at what the common denominators are here. You know, we have the euro and the pound, the euro and the pound, the euro and the pound. All 3 of those are kind of on the bottom side of this equation. So now that you've found and spotted the strongest versus weakest currency, that's all that is giving you an idea. This is the analysis portion, to where it's giving you that idea of which currencies are strong, which ones are weak over multiple time frames. And one thing that I did explain to the students earlier was, and another thing to realize is what's shown on PitView is not shown on a chart. Okay, because the area right in here between the bid and ask price, you know, as the bid goes up, it means there's more buying pressure as people are increasing or raising the amount in which they want to buy a currency. That's buying pressure. And as the ask comes down, as people lower the ask, that means people are willing to sell these pairs at lower prices. That would be considered selling pressure. And all PitView doing again is measuring that imbalance between buyers and sellers based on the action on the bid and ask price. So it's not reflected on a chart. It's very powerful when you get to know to use it. Now over here I have what's called group view. Now I have it on multiple time frames because I see the Swiss has been performing very well near the high here, and the euro has actually been near the bottom all day essentially. And what this does, it breaks things down. If you double click on like the Swiss or any one of these currencies, it'll bring up what we call the group view. And what this is doing is it's showing those individual pairs that are strongest or weakest. It's ranking them from strong. It's ranking them based on from an individual pair standpoint of showing you, okay, the Swiss is really strong right now. Which currencies is it strongest against? It's no surprise to me when you look at the top and the bottom of these rows that it's of course strongest against the pound, strongest against the euro. When it comes to just a pure market maker and liquidity provider activity. And you see that's also reflected on the 2-hour chart and also on the 1-hour chart. So that's where we get into picking a pair. Earlier in the class, our first case study, and the one that we'll look at, is the Euro Swiss. So we'll do a little bit of a case study here on case study number 1. Euro Swiss, and this is on a 1-hour time frame. And just to reiterate this point, if I'm trading off a 1-hour chart, you see how I'm looking up. I'm trying to gain more data, more confirmation for my trade by looking at longer time frames and not narrowing it down to shorter. There are examples that we'll use a little bit later on, and not just today, but as we go ongoing into the course of examples of shorter term time frames, 1-minute charts, 5-minute charts. I love trading short term. So let's take a look at this on a case study on the Euro Swiss. Based on this information, if you see that the Swiss is very strong on the global view and the euro is very weak on the global view among these multiple time frames, and then you break it down and look at the Swiss versus these multiple time frames from the 4-hour, 2-hour, and 1-hour, what would be your view on the Euro Swiss pair? Let me just ask you that. What is your view on Euro Swiss? Would it be bullish or bearish? Now, one thing to remember is that on the group view, because they're disseminating information from the bid and ask price, it'll look a little bit different on here in the fact that the Swiss will be the base currency in all these, because it has to calculate in the information based on the Swiss being on one side of the equation versus all the currencies. Yeah, you would be bearish on Euro Swiss. Now, why did I bring that up? Because over here it says Swiss Euro, Swiss Euro, Swiss Euro. That means the Swiss is strong versus the Euro. Now, as currency traders, we would be bearish on the actual Euro Swiss pair. We would be expecting that to go down based on that information, because that would mean the Euro is getting weaker and the Swiss is getting stronger as that exchange rate moves down. So now that we've performed the first two here, we've picked a currency, we picked a pair with that currency, it all comes down to this third thing, which comes down to pick a trade, essentially. So as far as picking a trade, that is where we bring pair view into the equation. Essentially, once I get done with these two things, I've pretty much already pulled up a chart at this point when I've picked the currency and I've picked a pair that I might be interested in that day, and from there I'd be pulling up a chart, and that's our next step, would be pulling up a chart and say, well, based on this information, maybe, just maybe, I might want to take a bit of a closer look at the Euro-Swiss pair. Do I always pick the strongest in global view? That's a great question, Rude, because the question is, do I always pick the strongest pair in global view? Not necessarily. And this is something that's a misconception about PitView, is that you always have to pick the strongest currency, and you don't. I know a lot of us, like I like trading the dollar yen right now. That's the other trade that I'm in, because it's at the lower part of its trading range on the long-term charts. I can either pick the strongest and weakest pair if I have no clue what I'm going to be trading that day and I just want to go with something and try to pick a trade that has the highest probability that gets me better than a coin flip, then yes, I can look at what the strongest and weakest currencies are. In the example of the dollar yen, I don't necessarily have to pick the strongest and weakest currency. If I'm looking to make a play on dollar yen, then I would use global view for a totally different purpose. I might use the global view to ensure that the dollar is in the stronger part of the equation and the yen is in the weaker part of the equation, which up until lately, as far as the last couple of hours, as it's consolidated down a bit, the last couple of days it has been. So now we're into the pair view portion of this when it comes to selecting a trade opportunity. But the answer to your question, quite simply, is no. You don't have to pick the strongest or the weakest, because I know a lot of us in this room right now like to, there's certain pairs that we like to trade. I, for example, like trading dollar yen, and we can narrow that down also. But let's go back to our case study on Euro Swiss, even though that was a great question. Let's go back to our little case study here on dollar Swiss. So now that I know, or Euro Swiss, I'm sorry, Euro Swiss. So let me go in here under the dollar yen pair. Actually, if I double click on any of these symbols here, what I'll generally do is, since I like to make my trading decisions off the 1 hour chart, and 1 hour chart is what I look at for swing trading methods, I'm going to go ahead and pull up the pair view, and I'll keep it right down here at the bottom of the screen showing the Euro Swiss pair. Now, I know a lot of us, a lot of you are short-term traders, and you might like looking at the 5-minute time frames over here on the right-hand side. However, what I'm doing more often than not is I'm going to be looking here at the 1 hour time frames, because that's, in this case, just for this trade, is what I call my trigger chart. Now, at this point, when we're looking at the 1 hour, what we call leaders, followers, and totals, a lot of times what I'm going to concentrate, my eyes are automatically going to go to the totals, because what this is doing is it's measuring the imbalance, not just from market makers that are leading inside the bid or ask, but also following inside the bid or ask. These totals are kind of an algorithmic total of both of those, because they can be looked at as both being equally important when measuring sentiment. So looking at the 1 hour total here, you see going down to the totals, I'll generally look at first, my eyes will go right down here to the bottom. It's at like a negative 18.79. Now you see this has moved over to the Euro Swiss, right? To where this means that from a bid-ask standpoint, this is at a negative, which would be bad for the Euro and positive for the Swiss. That means there's much more pressure of buying pressure for the Swiss versus selling pressure on the Euro. So this actually just confirms what we see over here, because you can see here we have Swiss Euro. Now it's Euro Swiss, because this is where this is how it's going to show up on your actual chart. The case study from this morning was the interesting aspect to me, and mind you, I'm a pretty simple support and resistance type of trader, is I like using Fibonacci ratios. If I connect the high to the low here on the Euro Swiss, this really does not look that much different than it did this morning when we actually executed this trade. One thing I like on Fibonacci ratios is looking for retracements in a trend and being a seller at these points at what we call the 78.6% retracement level. Well, this morning, right about this time right in here, you see that this is what we call, this is a difference between what we call a retracement and a trend. Even though the Euro Swiss might be climbing up a bit, the difference between a retracement and a trend is this is what we call a kind of a divergence in sentiment, if you will. Even though the Euro Swiss is going up on the chart and it's hitting this 78.6, I want to remind you that I am looking to be a seller at this level. This morning, when we were doing our morning class, it was trading right up in here on the chart. It was trading right up to the upside right in here. Now, the Euro Swiss is not a huge mover in the market, but because it was making this type of retracement, it was one I wanted to take a quicker, better look at. So when I see that the Euro Swiss is climbing up and consolidating, and in this case I'm already looking to be a seller on it anyway, most people might wait for this to come down and close beneath this 78.6% retracement level. They may wait for some type of confirmation. This is what we call a touch and close scenario, where people will wait for something to touch a certain level and then close beneath it to confirm their trade. However, if you're looking at PitView as it's climbing up to this 78.6 level, you would have seen that it was going from green to red, essentially, to where it was going from positive and then it went very much negative as far as the imbalance goes between the bid and ask price, to where it's negative 17.98, which favors the Swiss franc in this case. So what would be your action at this point? Would you want to wait for it to confirm itself and come down, or would you be looking to sell? Would you be looking to be a buyer or a seller? Would you wait for confirmation? No. This is one of the things that can get you into trades much earlier, is when you see that sentiment start to shift. One of the key points is that I'm looking at the 1 hour time frame here on the pair view, because I'm trading off a 1 hour chart. If you look at it, if you mix your time frames up, you're just going to do nothing but bad things for yourself. Trust me. So that was the action, is that we had a divergence in the actual imbalance versus what the actual trend was. It was coming slightly up, but PitView was showing down. The powerful part of this type of tool is that sometimes this can give you more of a leading indicator of what's actually going to occur on the underlying pair. If you don't see the importance of that, there's many different ways in which we can explain it, but the importance of being able to see moves before they happen. That's what a leading indicator is. It's trying to show you moves, or what a possible or potential move might be before it happens. Some people might use a stochastic or a MACD or a CCI, but in this case, all those are doing are showing you what past market movement was. But what this is doing is it's showing you what's happening right now. In this case, market makers are favoring the Swiss franc in this case. So it's not necessary, if you trust in it, sometimes it's not necessary to wait for some type of confirmation. You can just go ahead and get in to the trade, especially if you're already looking to be a seller at a certain level. I didn't plan on even showing it this morning to the morning class, but I ended up showing it to him anyway because it was occurring right as we were getting into it, and I saw the PitView starting to turn. Whenever you see 100% down in here, it just means that you see LP23 represents about 81% of the total market that day. As you get to look at these much closer and look at them on a consistent basis, some people tend to be groupies of individual liquidity providers. When it says 81% of the movement, a lot of people might follow just LP23. But when it says 100% down in here, it just means that they haven't been as active. You see that LP24 and 10 and 13 only represent about 2, 1, or 0.88% of the overall market movement. So that was the actual, let me kind of get back to the actual trade and case study. It's amazing how fast an hour can go by in these classes. I talk too much. You can see we sold three. I did 3 Euro Swiss at 1.21537. I happen to be on a platform that has a very high spread on the bid and ask on some of the pairs that I trade. But that was the action. It was actually right up here, a little bit higher from where it's trading at right now. And since I'm on a 1-hour chart, I don't want you to construe this as me thinking that this is going to move down in the next 2 or 3 minutes. Remember, when you're trading off a 1-hour chart, I'm more than happy being in a trade for even longer than a day. I was just looking at being a seller at this level anyway. But PitView confirmed it a bit earlier to where when you look at the high right in here, we got in almost right near this high down in here. It's just taken a little bit longer to come down to the downside, but it still oftentimes can get you into the trade that much earlier. The shorter the time frame you use, the faster the movements you can see that happen. If I were to go to a 5-minute chart on here, you can see that right up in here where we entered into the trade is when the turn started to happen, where PitView started going from a green tone where we already had a sell level to red to where it actually confirmed the trade right up in here. On the 5-minute chart, you can see, even though the spread does not reflect it in my trade, you can see that it had already made a turn at that point when we entered into the trade this morning. And I still do think if you're a confirmation trader, this is doing nothing but confirming this as a sell trade right now on PitView as a good sell on Euro Swiss. I went to a 5-minute chart just to show you that oftentimes if you're on a trading platform like this that has high spreads between the bid and ask, you have to kind of narrow down to that 5-minute. But if you see that it called it perfectly from where the entry would have been to where it is right now as far as the turn as it goes. Right now I haven't quite covered the spread yet, but that's just because this is a very much a low volatility pair, meaning it doesn't move that much in a given day. And so it's also what I would consider to be a low risk trade. As far as stops go, I'd be putting my stop right above the 100% retracement level and looking for at a minimum of a 1-to-1 risk reward. Now, here, let me check questions. Well, looking at this chart live, people would ask me, what would you take off as far as a target level goes on PitView? And this kind of comes back down to the management portion of it. When you look at where I put my stop loss, which is essentially only about, what is it? Let's see, 2-1. See this high right in here. I think I have it wrong on there. Look at this high, 21583. It should be stop at 1.21613. That's where I should have had it. I think I mistyped it earlier. Modify it. Sorry, that was just something I had to do real quick. As far as putting my stop, above this 100% retracement on this fib level, I'm only risking about 8 pips here. But the other thing that I would look for on PitView that can, as a trade starts working more and more in my favor, is oftentimes, especially when you don't get so spastic on your time frames and just look at the 1 hour, I may not put a target in for this. I may move my stop to lock in what I call a 1-to-1 risk reward, or you can scale out of your trade, meaning take off small profits. For example, if I have 3 micros in this example on this trade, when it reaches what I call a one-to-one risk-reward standpoint. If I'm risking, let's say, 10 pips to make 10 pips, once I reach 10 pips of price movement, I might take off one lot to lock in a one-to-one risk-reward and move my stop to break even. But as far as a take profit level, one of the beautiful things about when you're using PitView is it can certainly keep you in trades longer. Like if this starts coming down to the downside and you still see that PitView is red, even though it's moving very close to your price target, or maybe it's moved within a fractional pip of your price target. Oftentimes, if this is still red, if this is still showing that the market makers still and the liquidity providers are still favoring the Swiss franc, meaning the Swiss franc is being well bid by the liquidity providers, then it may not be, you can actually stay in trades. And all you might do is once it comes down to those levels where it's staying in the red on the Euro Swiss, is wait for it to come back up and go green. So working out PitView can come out to several different types of things. I still believe that you should have your own profit targets. Rude, I know you'd asked a question on there, but let me get back to Ryan's question here. One-to-one risk reward is always a crucial level in my opinion. If you can do more than one lot on a trade, I think that you should always get used to taking some type of profit at a risk reward, at a one-to-one risk reward, meaning whatever your stop is. In this case, it's almost 10 pips. Take some type of profit at a one-to-one risk reward. But have any of you ever heard of what we call scaling out? It's where you take small profits off on your trade, move your stop, and gradually scale out on your trade. When you scale out, you take profits off and you keep some of your lots still on the table. And in this case, PitView is awesome, and I mean that, just awesome at being able to keep you in those further profit targets longer. And that's often what it comes down to for people, is not being able to pick a profit target or a proper profit target on their trades because they always want to be greedy. In this case, what I might do on the 1 hour total is just sit there and watch it and wait for that 1 hour total to go green. If I'm already locked into a profit, wait for it to go green or wait for it to make a drastic move, towards neutral, which is 0, and to the green side of the equation before taking profits off. But how did you, the next question is, like from Herc, is, how did you pick this to begin with? Herc, when we're looking at these trades as a whole, a lot of times they're getting two levels. If the levels make sense, if you will, as far as room to go, as far as coming to a level where most traders would be looking to be sellers or buyers at anyway, all PitView is trying to do is, instead of sitting there waiting for a candlestick confirmation on that 1 hour chart, I'm just looking for, if PitView is already going red and showing that the market maker sentiment favors the direction of my trade, it can just get me into the trade that much earlier. Like right now, if I was waiting for the price to close beneath that 78.6, I would have gotten into this a little bit later on into the trading day. But this got me in a little bit earlier, a much more early price to where I have a little bit more probability of it moving in my direction. I don't know if that makes sense or not. But there's so many different uses as far as this tool goes, and it's several different ways it can be analyzed. This is just using a very simple approach, using that 1 hour time frame. So as far as right now, let's see here. Another question. If I trade a 15-minute chart, is it best to use 15-minute, 30-minute, and 60-minute? Generally speaking, that's what I'll do, Rude. The question is, if I trade using a 15-minute chart, is it best to use 15-minute, 30-minute, and 60-minute on the global view? I would say absolutely. Being able to look at the 1 hour, because you're narrowing your time frame down into a much smaller time frame as far as intraday trading goes, into 15-minute charts. I always like to add several time frames on top of mine. So like I trade from a 1 hour, I go 2 hour, 4 hour. So I go up one and then another time frame as far as what I'm looking at in my trades. That's a great question. That's one of the common questions that I get here on PitView, is the fact that people have a hard time because they trade mostly off 1 hour charts, and they're sitting there looking at a 5-minute PitView window, and that really is, it can hurt your trading, because it's just like using a 5-minute stochastic when you trade off of a daily chart. It's just way too spastic. It's disseminating way too much, too short amount of information to you. So that was the play right here on the Euro Swiss. For right now, what I'm doing is I'm keeping my take profit open on this, and I'm going to see what this Euro Swiss does coming down. If it goes positive here on the 1 hour charts, I might consider getting out as far as just taking profit off the table. But this trade, let's be honest, it could take some time to come to fruition. I'm not looking for this to come to my full profit in a minute or 5 minutes. It can take some time on here. Another example of using PitView as far as your trading method. On what signal and pair view would you exit a trade? I tend to look at the that's a great question. On the 1 hour totals, I tend to look at the totals. And you kind of look at white or zero is neutral. So if you imagined the pair view being like a MACD, where the zero line, when a MACD crosses above, makes a positive cross, that's a buy signal. And when it makes a negative cross, it's a sell signal. When you're looking at these time frames, especially on a 1 hour time frame, I might consider, and this is all dependent on where I'm at in the trade, if I'm at a profit or a loss level. If I'm at a profit level, if this thing starts going up and hits zero, and zero means that it's a 50-50 imbalance from the buyers and sellers, between buyers and sellers. If it hits zero, that means it's crossing back above into positive territory and getting green. So that would show me that the sentiment is shifting on that 1 hour time frame, where I might want to consider getting out. It can help you get out of trades earlier from a risk standpoint. It can keep you in trades longer from a profit standpoint. Does that make sense? So I use kind of the white or the neutral of zero as kind of a confirmation for that. But going back to Ruth's question on the 15-minute chart, you would also be looking for those crosses coming up and down on a 15-minute chart. And quite often, that's why you always are looking up. I don't know. Yeah, sorry about that. I went a little off topic. So that was a trade from this morning, just using that simple thought process as far as, just looking at a retracement as it occurs in the market and showing you how PitView can confirm before the move happens. You saw it kind of on that 5-minute chart that it confirmed before it happened that it was in fact coming down. It got me in the trade a little bit earlier. So it's already moving in my direction. Well, you're down 50 cents. Well, I'm down 50 cents, but coming into the trade, there's a larger spread on the Euro Swiss. That's why it can take some time to what we call cover the spread between the bid and ask price. It's actually moved in my favor from where I opened it. All right. Another trade opportunity, speaking of swing charts, if you will, on let's say a 1 hour time frame. And I'm sorry for monopolizing your time here. I did the same thing in the earlier class. Looking at the dollar yen, looking at and specifically, with PitView and the way that it can help confirm trades. Going through that 3-step method, that was something to where I kind of found a trade that I was already looking at this morning based on the strength and weakness on the Swiss versus the Euro. I was able to pick a currency, pick a pair, and pick a trade based on just doing that top-down 3-step approach using PitView. Another way to use PitView is confirmation, and this goes back to a question earlier of, do you have to look at just the strongest or the weakest currencies? And the answer is no. In this example, I'm looking at the dollar yen. So when looking at the dollar yen right in here, this is another trade that's a great example of how this can be utilized as far as a confirmation indicator on your trading. When I'm looking at the dollar yen here, 102.15. kind of bring these support and resistance levels down here a little bit. You can see the dollar yen, and what I like to do oftentimes is, you also want to be able to establish your view on charts also. Even though what's on PitView is not on a chart, we always use charts also in our analysis, and this is a great combination of both of those tools being utilized for a great confirmation of a trade that I was already looking to place. When I'm looking here at the dollar yen on a daily basis, sideways trending market for the last 6 months. This is another one that I had covered earlier here this morning that I'm already in. You can see I'm up let's see here, about 10 pips on this right now. When I'm looking at the dollar yen, you can see every time the yen has come down to the upper and lower parts of these ranges, you see that this sideways movement that the yen has had, these are what we call pass-through levels. Whenever it's come down to the bottom part of this range, it's had no problems bouncing up and reaching the top part. Whenever it's come to the top part of the range, it's had no problems coming back down to the bottom part. And this is just looking at the longer-term support and resistance levels on the dollar yen, just looking at the most common levels of support and resistance. When we narrow this down, once again, this is another example of, if I were to narrow this down to a 1-hour chart and take a look at dollar yen and the opportunities that existed on here, what I tend to do is I'll put support and resistance levels on common areas of buying and selling pressure, and then I'll put these secondary lines about 20% above and below those support and resistance levels. These are what we call lower range lines. And so once the price comes down and closed beneath in this range, you would consider it to be oversold on the yen, just looking at that longer time frame. And essentially the strategy would be to wait for it to close above this lower range line, kind of like a stochastic, in order to buy it. However, one trade that we had, this trade right in here, we had gotten whipsawed in and out of this dollar yen trade to where we got, me and my students got stopped out of this past week. But I still favored buying the dollar yen in the lower part of that range. Now, looking at this as it came into the oversold level, a lot of my students were scared off of this trade. But again, looking at this 1-hour time frame, all throughout this time right in here, looking at the 1-hour charts on here, let me change this to dollar yen. So all throughout this time frame right in here, the dollar yen, it was red the entire time. Now I already favor this going up, so I already have a view of the dollar yen being able to go up and reach the top part of this range. What I was looking for was a good entry, and so instead of waiting for it to break above this high right in here, PitView is red, and I mean dark red, like the -100 or the -60 right in here, dark red throughout this entire time frame right in here. And then right when it broke through, you see this little area of resistance right in here. I would normally wait for it to break above this lower range line, but once it broke through this resistance level right in here, it barely broke through that resistance level, and the entire screen down here on the 1-hour time frame and the totals, it went to like a +30. And so I was able to get in at the opening of the next candle right in here and be part of the bigger move on dollar yen as it started to go up instead of waiting for the confirmation of the breakout to the upside. So when looking at this dollar yen trade, all this did was really confirm a strategy that I already had in place on dollar yen of looking for it to break into break above that lower range of support. Now, I know some of you may not understand what I'm talking about because you may not understand the strategy. So I'm making a lot of assumptions here, knowing that, basic support and resistance trading, looking to buy things at a lower part of the range, sell things in an upper part of the range. All this was able to do for me is just confirm this before the major move happened as far as where my entry should be. Now, once I'm in a trade and I'm profitable, and in this case on the dollar yen, this is not the actual price that I got in my other account, but we can use this one. This is a different strategy altogether, but this will work. Once we're actually in the trade, this is already at a profit standpoint. When you look at dollar yen, you can use PitView and global view and group view to confirm, the strength and weakness over the longer time frames of the dollar yen. In this case, this has been fluctuating today. In fact, this went negative here on the totals, so the question would be, would you be selling it right now? Well, right now I wouldn't be looking to sell it. For one thing, one subject matter to close out my position, if you will. One subject matter we haven't covered yet is knowing what time the market is trading. For example, right now it's 2 o'clock in the afternoon here in the U.S. 2 o'clock in the afternoon in the U.S. is like watching freaking paint dry when it comes to trading. You've already had the London and European markets shut down. The afternoon session in the U.S. is usually a historically slow period. That's one thing that we'll be covering further as we go a little bit more in depth into what we call session analysis, which is identifying what session you're trading. So in this case, even though it's gone negative, if it were to going negative like at 8 o'clock in the morning or 9 o'clock in the morning when I know there's more market maker participation in the market, a lot of it is just knowing when you're trading, which is another big mistake that people make, is not knowing what times the market actually moves. So at this point, I would still keep this trade open. Both trades on the Euro Swiss and dollar yen, I would keep open because knowing when PitView is moving up and down, because it is calculating those imbalances, is a little bit different than actually knowing when the actual underlying market moves and when the most volatility can hit the market. I've gone way long here in this hour. One of the main things I wanted to get across, and this was really a jumping off point for me today going through this. It was a bit embarrassing, whatever was going on with my PowerPoint. But on these two case studies on dollar yen and euro Swiss, these are just both examples of PitView confirming a trade before the move actually happened, before the bigger move actually happened in your direction. One of them, euro Swiss, it hasn't made the big move yet, but it was already at an entry point. Dollar yen has already made a large move up, and that was an example of it getting me in much earlier into that trade. The other things that we have yet to discuss, which are going to be upcoming in future, in fact, we'll be covering this on Monday morning here in class, is talking about things like room to go. Because one thing you have to remember is that PitView is a tool. It's a tool, it's a trading tool. It's just like any trading tool, it's not 100% accurate. However, I think the accuracy on it is a hell of a lot better than using, let's say, a MACD or stochastic, because it's allowing you to trade along with the market maker sentiment, the liquidity providers, the big money, and giving you a view of what's occurring between supply and demand in the marketplace. Upcoming subjects that we'll have to cover more in depth is going through what we call session analysis, knowing what times are the best times to trade the market. We'll be covering quite a bit on, this was more of looking at PitView as a confirmation tool, and also a little bit on using it as an entry tool of how it can get you into trades a little bit earlier on your underlying trading strategy. But all of that will be upcoming. We'll be coming back into class next Monday morning, and hopefully I can fill in some blanks for you. So I apologize for it not being as structured here the last portion of the class because we had to go live. The other thing I want to discuss on Monday morning is going into shorter time frames, because I know a lot of you like to trade off more like 5-minute charts and 1-minute charts, and there are certain things that we can utilize with PitView of looking at 5-minute and 1-minute charts and different ways in which to use it as a confirmation tool or even an entry tool, or when it might keep you out of bad trades. I would the question comes up, is it more leading or lagging? It is certainly more leading. It acts as certainly more as a leading indicator than a lagging one, because it is really telling you what is occurring right now, where the rubber meets the road, in that little area between the bid and ask price. So I would certainly look at it as being more of a leading indicator in the market versus lagging. Hopefully that was helpful for you. I know I'm way over time, so let me bring up my PowerPoint back up. evidently my 7-slide PowerPoint here. I do apologize first. I don't know what occurred there with my little presentation of why it was only 7 slides, and we were able to go live. One of the great things about PowerPoint is it generally keeps you more structured, but hopefully I was able to recover a bit from that. It's happened to me before. But if you do have any questions, I have been away from my email for several weeks as I was dealing with some other issues, but I'm back on email now. I know a lot of you have sent me emails in the past. I'm trying to play catch up here, but feel free to shoot me any emails with any questions that you might have at steve.neri@pitview.com. For more information on how to download. I know a lot of you are already PitView customers. Some of you have demo accounts set up through PitView. If you go to pitview.com/web, that is where you can sign up for either demos for a 14-day trial or sign up for a subscription-based service for PitView. So coming up in the upcoming weeks, I hope to fill in more of these blanks for you. And so let me know if you do have any questions, and I want to really thank you all for attending, and I will chat at everybody next Monday morning if you're here. If not, let me know and I can shoot you out the video portion of it or the recording. So that being said, that is all, folks. I'm going to go ahead and sign off here, and let me know if you do have any questions. So this is Steve Neri signing off, and I will chat at you later. Bye-bye.